Ever feel like when you're looking ahead to retirement, it's kind of like this big puzzle? And not just like a normal puzzle, but one where the pieces keep changing.
Right. And you don't even know what the picture's supposed to look like.
Exactly. That's why today we're doing a deep dive on retirement income, the different ways your money can work for you.
We're not just going to, rattle off definitions. We're talking strategies here.
We want you to actually enjoy those so-called golden years, right? So let's break it down.
Let's do it. We're talking about the three main categories of retirement income. So, tax now, tax deferred, and tax advantaged.
Okay, so tax now. I feel like a lot of people are already doing this without even realizing it.
Totally.
It's like if you've got a savings account or you're putting money in stocks, you're paying taxes on that income, like right away.
Exactly. Every year, boom, taxes on those gains. It's predictable. But here's the thing. Those assets, they're considered part of your estate.
Yeah.
And that can get complicated.
So like paying your dues up front, but maybe with some hidden costs down the line?
Potentially. Now, let's say you want to kick those taxes down the road a bit.
Yeah.
That's where tax deferred comes in.
Yeah.
Think 401ks, IRAs.
The old I'll deal with it later approach.
In a nutshell. But seriously, they could be a good option for some people.
Yeah, especially if you're like in a higher tax bracket now and you figure, hey, I'll pay less in taxes when I retire.
Yeah.
Exactly. But there's always a but, isn't there? Those taxes, they're not gone. They're just waiting for you.
Like a scary clown lurking in the shadows.
Maybe not that scary.
Yeah.
But yeah, you will eventually have to pay taxes on both your regional contributions and all the growth in those accounts. See, this is what I mean about retirement planning being a puzzle. And did you say something about RMDs earlier?
Ah, right, RMDs.
Yeah.
Required minimum distributions. Basically, once you hit age 72, Uncle Sam says, all right, time to start taking some money out of those tax-deferred accounts.
He's like, you've been saving long enough. It's party time.
Well, you might not freeze it like that, but you get the idea. And if you don't take out the required amount each year.
Let me guess, there are penalties.
Big ones. So tax-deferred, definitely some pluses, but be aware of the potential downsides too.
Okay, so we've covered tax now and tax deferred. That brings us to our last category, tax advantaged. Is it as good as it sounds?
It can be. This is where things get really interesting. Think Roth IRAs, cash value life insurance.
Okay, so let's say you've got someone like Sarah. She's 45, doing well in her career. She's maxing out her 401k, but she's looking for other ways to grow her money for retirement.
Got it. So with a Roth IRA, Sarah would pay taxes on the money she contributes up front, just like with her regular investments.
Okay, so same as tax now so far.
Right. But here's the magic of tax advantaged. All that growth on her contributions and any withdrawals she makes in retirement, totally tax-free.
Wait, really? So all those years of compounding, and she doesn't owe a single dime in taxes when she takes the money out?
You got it. Plus, no RMDs with Roth IRAs. You get to decide when you want to take your money out.
That's huge. So basically, tax advantage is like leveling up your retirement planning.
Exactly. But, and this is important, the best approach really depends on your individual situation.
Right, because everyone's financial goals are different. Their risk tolerance is different.
Exactly. And that's why, sitting down with a financial advisor, somebody who can really look at your unique needs, it could be invaluable.
Absolutely. So for anyone listening thinking, this is a lot to process, what's the one thing you want them to take away from this deep dive?
I'd say this. Think about what matters more to you. Do you want more flexibility with your money right now? Or are you willing to play the long game, even if it means making some sacrifices today?
Because those choices you make now, they have a ripple effect.
Exactly.
They can impact your financial security for decades to come.
Couldn't have said it better myself.
This has been super helpful. Thanks for breaking it all down for us.
Anytime.
Thank you very much.